I don't know if this is a light at the end of the tunnel, Jonathan. The Disney earnings, well, it's a loss, which was expected, are breaking as well. But it's not as bad as expected, I don't believe. Adjusted at 20 cents a share, the street was expecting Disney to lose much more than that at 70 cents. And revenue is also better than expected, 14.71 billion. Stock's up almost 5% here in the few seconds since the number came out. Jonathan, give us a deep thought here on Disney, if you would.
Yeah, kind of obviously I'm watching the stock shoot up here in the after hours. This could be a question of buy the rumor, sell the fact, or maybe buy the fact, sell the rumor. The loss, as you said, and this was expected. I mean, think about Disney. Its whole business model is centered around entertaining large groups of people. We know its theme park business, what they call its theme park and experiences, movies, etc. That has been absolutely decimated by COVID. And everything that used to distinguish Disney, like its theme parks from Netflix, has turned into a drag amid COVID. So obviously we're going to be wanting to dig into those Disney Plus numbers. And the stock's been an underperformer. S&P's up about 14% this year. Disney is only up about 4%. So it's really been a drag. It's nice to see the loss because the stock seems to have anticipated it. That's why it's up after the bell.
Right, and not as big as expected, as we said, on the loss. Carlton, it's interesting. Jonathan brings up parks experiences and consumer products, which is that business segment, actually did a little better than expected, $2.58 billion in revenue. Expectation was 2.38, but, and we'll get in when Ashley Webster joins us in a moment on Disney Plus. But, Disney's trying to weather the storm here and get through this. And I guess one of the ways you do that is by launching a streaming service while everyone's at home. Your thoughts on Disney?
Exactly. They have to do something to make up for that lost park revenue. Disney Plus certainly is a way to do that. And the tricky part here is it launched about a year ago, and we have to see, are those kind of Verizon customers that got that package deal, are they going to roll off? Is Disney really going to be able to make up for the lost revenue on the park side of the business, or even the production that's been delayed or halted because of COVID? Is streaming going to be enough to do that? Now, what I'm really looking for is next month when they have their Investor Day, where they talk about that new media strategy that they have and, how they're going to be looking to monetize their content, whether it makes sense for things to go to a theater, to go on TV, or to go onto the streaming platforms.
Mm-hmm. All right.
Yeah.
Boy, this stock's really shooting higher now, up 6%. Let me bring in Ashley Webster, who's covering this after the bell for us. And certainly versus expectations, Ashley, you couldn't ask for much more, right, from Disney, I guess?
Well, the headline numbers, we're expecting a loss of around 70 cents. It came in at a loss of 20 cents. And the revenue, too, as you pointed out, Connell, $14.71 billion. It's still down around 20% year over year, but better than was feared. I'm just looking at the parks and experiences. Those are the cruises, all of the theme resorts and the theme parks. Coming in at $2.58 billion, still not great, certainly a lot better than the third quarter, where this segment lost $3.5 billion. It does beat the expectations, but still down. I mean, year over year, 50%. It's very hard to compare anything to last year, of course. The studio entertainment number, not surprising here, coming in at $1.6 billion. The estimate was for $2.07 billion. The studios have been hit so hard, as we know. A lot of productions have been postponed or in some cases canceled. And the question becomes, are you going to do more, Disney, to go straight to Disney Plus with your, theatrical releases? So we'll get into that more. Media Networks number was better as well, coming in at 7.2 billion. The expectation was 6.8 billion. So you look at after hours here, this stock is up 6% or thereabouts. But to your guest's point, the question is, can the direct-to-consumer number, that's the, include Disney Plus, that was slightly better than expected. It's actually under direct-to-consumer and international. They have so many different divisions. Slightly better than expected, but not enough, I don't think, overall to offset what they've seen for losses at their theme parks and resorts. And let's not forget, Disneyland in California still closed because of those very strict California regulations. Could stay closed till next summer. And there has been talk that Disney may join a lawsuit with other entertainment and theme park operators in California to try and get at least a partial reopen like they have in Disney World. So we'll see if there's any mention of that at all on the call that's coming up at the bottom of the hour. But overall, as you can see, better than expected for Disney in a very challenging environment.